The information in this episode is current as of the date recorded and is not intended as financial, tax, or legal advice. You should consult your tax, financial, and/or legal advisors before implementing any transactions and/or strategies concerning your finances.
Hi, my name's Alex Chacho, and I'm an associate advisor at John G. Ullman and Associates. I'm here today to talk about mid-year financial planning. Right now, you've had the first half of the year to have real data and look back at what has happened in the first half of the year, and you have the second half of the year to make any changes that you need to get back on track for any goals that you have. So the first thing that I'm going to talk about is cash flow. And what I mean by that is usually a budget or expense tracking that you probably have going into the year based on last year. And now that you have the first half of the year to look at your real expenses, you can see how that stacks up against the budget that you set. And maybe the issue is that you have more expenses than you think. Maybe there's something that you didn't realize you were spending money on. Or you are keeping to the budget, but the budget just isn't working like you thought. And like I said before, you have the second half of the year to make any adjustments based on what you're seeing and kind of get yourself where you need to be. The next thing would be retirement savings. Now, most people, especially if you're just working for a company, are contributing to a retirement plan such as a 401k, a 403b, or an IRA, and you set those contributions usually when you first get hired to that job. And it's only up to you to take a look at and make any changes to those as you progress throughout your career. Now, if you haven't looked at those in several years or ever, then your contribution rate may be a lot lower than it could be, as hopefully as you progress throughout your career, you're earning more and more money as time goes on, and you can likely now afford a higher contribution rate now than where you started or just a few years ago. And any more that you can save towards these retirement plans really helps out putting you in a better spot for your retirement. Another thing that you might have guessed that you should take a look at, as we are an investment company, is your investment portfolio. As you're investing in these retirement plans, or if you have a brokerage account, a lot of people invest in ETFs or mutual funds where you're able to kind of let those sit for longer periods of time and not micromanage it day to day or week to week. But even if you're in those, as time goes on, that allocation will still change as you get older or as you have certain goals. Big one is as you near retirement and you may be nearing when you need to start withdrawing money. You might need to change the allocation between equities and fixed income and bonds to better adjust for, if there's a downturn in the market and the stocks are going down, if you need to take money out just to either sustain your lifestyle in retirement, or if you're planning like a wedding, or if you're buying a new car. You don't want to realize any losses in the stock market with like a short-term downturn if you can, where having some money in fixed income or bonds can really help mitigate that risk. Another thing that we often talk about here is taxes, and tax planning is something that we do often, and you should also take a look at, especially halfway through the year, because just like with cash flow, you now have the first half of the year of real data based on your work or any investments to see where you stand as far as taxes go looking ahead to next year. As taxes are usually defined by the year, if you wait until the end of the year, you don't really have time to make any changes. So if you're someone who owns a business or self-employed, you likely need to make quarterly estimated tax payments. So taking the time to review your taxes often throughout the year is necessary. Also, if you're someone who has a W-2, but maybe your withholding wasn't as high as it needed to be, if you haven't already made changes to your withholding through your employer, you can do that now. Again, this is something that's best done early so that you have time to make those changes, because if you wait until the end of the year, you'll still just be stuck with whatever tax status you kind of ended up with, because it's too late to make changes for 2026 at least. The other thing is that if you have a brokerage account and you have investments, you want to look at if you have any capital gain, as those would also require you to make estimated tax payments, most likely. Also, if you have any stocks with losses in them, you can strategically sell those stocks if it makes sense to offset the gains from the other stocks. Obviously, you don't want to just sell stocks with losses just because, but if they've dropped a significant margin, then you kind of want to limit those losses anyways. Now would be a good time if you also have gains. Now, insurance. Insurance is something that you probably don't need to check twice a year or even every year, but if you haven't looked at it in a while, then insurance is a good thing to review and make sure that you're fully covered on everything. The other thing is that you just kind of want to keep an eye out for any major life events that might suggest that you need to make a change to your policy. These may be things like a younger kid who's turning 16 and starting to drive. Maybe you built a shed or like a workshop in your yard and that needs to be covered under your home insurance. Maybe you got recently married or you had a new kid and you might want to think about having life insurance just in case anything happens. These kind of life events suggest that you should take a look and review your insurance policies. But even if you don't have anything major coming up, if you haven't looked at them in a while, it's always good to take a refresher look and just make sure that you didn't miss anything back then. Now, the last thing that I'm going to talk about is basically just a catch-all, which is just like any major goals that you have going into the year or even looking out for the next several years or farther into the future. These might be things like retirement, which is a big one, or any like larger vacations, or even if it's just like buying a car, maybe you're looking at buying a house. These kind of bigger plans take a lot of time and money to plan around and making sure you're able to afford them and that you're making the right decision. Halfway through the year is just a logical time to take a step back, look at your big goals, make sure that you're working towards them, making sure you're staying on track. And also just making sure, if it is a house that you still want to do it, that you haven't changed your minds, just things like that. Now's just a good time to review your goals and make sure you know where you stand.
Thanks for watching. If you found this video helpful, give it a thumbs up and hit that subscribe button so you don't miss future updates. Looking for more insights like this? Head over to our website at jgua.com for additional resources. And if you'd like to talk about your personal financial goals, we'd love to help. Just click the Schedule a Meeting button highlighted on your screen to book your complimentary consultation. Thanks again for joining us. We'll see you in the next video.